All right, so here's how we avoid tax on excess distribution within an S corporation. We would record it as a loan to the shareholder or the officer instead of a capital gain. Now, we want to make sure that we are careful when doing so because obviously we're avoiding tax. We want to make sure that this is actually legitimate. Documentation, i.e., a loan document, needs to be created and signed, and then you do eventually need to repay this loan back to the company to avoid the tax legitimately. So what is excess distribution in an S corporation? It's essentially when more money comes out of the bank account than what the business made in profits. And most people would say, how does something like that happen? Well, it happens in one of two common ways. Number one is the business gets a loan and they distribute that loan proceeds, or we essentially claim a big depreciation expense on the tax return, so the profits look really low when really that money didn't leave your account in expenses. Therefore, you had the money available to distribute, so you took out more than what the bottom line is on the tax return. Generally, when this happens, we should be recording a capital gain and pay tax on that excess distribution. But to avoid this, we record it as a loan to shareholder. This is how we do it. All right, so let's work with some facts here. This is what happened bottom line with the business, okay? The business had $100K of income, $50K in expenses. Bottom line, they got $50,000 of income. On the balance sheet, what happened? Well, their bank account essentially only has $460K only. That's a lot of money. Sorry. It's pretty good. $460K is what they got as cash in the bank account. Liabilities, they got a loan, in this case, of $500,000, right? Their net income, right, just flowed right through, $50K, retained earnings, there it is. And distributions of $90,000, right? How were they able to distribute more than what they made? Well, they got this big loan here, okay? So essentially, right, that difference between the 50 and the 90K was the what we call excess distributions, which again should be taxed as a capital gain, but in this case, we're going to try and avoid that. How are we going to do that? Right? Well, I guess I just explained that one. We're going to do that by recording this as a loan to shareholders. So here's what the journal entry looks like in QuickBooks to record that loan to the shareholder, again, to avoid the tax here. And there you go. This is what it's going to look like once we make that adjustment in QuickBooks. Okay, you'll see that loan to shareholder up top as an asset for the business because you are supposed to pay that $40K back. It's a receivable. All right, so how do we do this in the software with ProSeries? Essentially, we got to do the basics. Income, expenses, right? Bottom line, what's happening? There it is. We got a little scroll down thing, essentially. When you're in the software, we would scroll to do that, okay? The next, we would then go to the balance sheet and record, right, what's in the bank account and what is our loan to shareholders, right? And what is that excess distribution there? And there you go. The difference, the 50K, would be recorded as distributed to shareholders. And then there you go. Liabilities, you got that $500K loan on the books, and your balance sheet balances there at that point. Okay, and then we would then do the M1, the 50K per books, pretty straightforward there. And how does it look on the 1120S when we record the excess distribution as a loan to shareholder to, again, avoid that capital gain tax? Here you go. Income, expenses, bottom line, 100, 50, 50. There it is. And then on the Schedule K, right, ordinary business income is 50K, and then you'll have that distributions down here, 50K. And then the balance sheet, it's going to look exactly like how we kind of just previously showed it, but there it is on the actual Schedule L. You'll see again, line 7, loan to shareholders. That's that essentially magic trick. It's not a magic trick. Why? Because you do actually need to repay this 40K, and there's got to be like a contract here for this loan. And there you go, the M1 and the M2 to record that as well. And there's your K1. And again, you will not see anything on lines 7 or 8 to record the capital gain. And then the basis worksheet, right? Pretty straightforward, though. Hope the video was helpful. If it was, smash the buttons for us. Help us out. Thank you so much.